Good day, Divergence traders. How y'all doing today? Hope you're all good. It's time for the setups. Yes, it is. And man, did we sell off, eh? Let's just take a look at the 1 hour chart for fun. Look at that. If everybody thought, wow, what a move it was yesterday. And right here, it rammed up 100 points in like 1 minute. But anyway, and now look at it today. They're selling it right off again. They're probably going to come right down to here again, somewhere down there. Let's put a line. Right there. Ah, yeah. Let's see if we go down there today, eh? At the bottom of these little wickers of yesterday. Huh? Yeah. Let's go to the 5 minute now. Okay. Was there a trade to sell before the open? Oh, there definitely was. We have a high and a higher high. Okay. And we have it going down. See what I sold there. Now I'm going to make the chart just bigger for just a little bit, just so I can show you the setups, okay? Because the charts are all squished and mangled and reformed. Let's try and make it look a little bit easier. Make it look a little bit easier to see the setups. Okay, well, maybe that, sometimes that doesn't help. Let's look over here. Oh yeah, there we go. That works. Yeah, so it comes back one more. Yeah, but even if I adjust it, you see the divergence. Right here, we have a cross down, opening of this candle. We sell it. Okay, right there. And it goes down to 49.50 points, let's just say. And your stop would have been 23, so that's 2-to-1 win-loss ratio. Okay. Then I want to show you another trade. But I wouldn't have done this trade because, but I'm still going to show you, I wouldn't do it because the stock market has not opened yet. But you can see it right there. See that? See that? Lines up perfectly. That is bearish hidden divergence, but I like to call it hard to see divergence because it's hard to see it trying to look for it. Yeah. And you would have got in just on the open if you did that. Okay. Me, I was scalping all the way down. Remember that letter I wrote yesterday and read it to you about how people are in fear to sell it in a downtrend. So instead they buy it and they lose? Yeah. Well, that's what happened to a lot of traders today. They got what they call something psoriasis, or no, not psoriasis. I don't know how to say it. Where you kind of get paralyzed and you sit there and you can't trade. You can't sell it because you don't know if it's going to keep going down after it's went down so far so quick. You can't buy it because you fear it's not going to go back up and it's going to keep going down. So you're stuck there. That's why you got to just go, hey, I got to take a chance here and jump in. And that's what I did. I jumped in here. I took some profits here. I jumped in again and again. And one more time, I jumped in right here. I did it about 4 times on the 1 minute time frame. And I made my points for the day. Hooray, hooray. So that's a 5 minute. That was the 2 trades before the open. Here's a trade right here. You know, it came back to the moving averages. If you use my buy the dips, sell the rallies technique, which is a higher closing candle, you sell it right here. But you wouldn't sell it there because You need it more so to go back to the 5, which it did, and it closed here. This is where you'd sell it on the opening of this cross-looking candle. Jesus is going, go ahead, sell, sell. You're going to be okay. God is on your side with you. Yeah, God bless you. So anyway, you would have got in right here, and just to there, it's like 63 points all the way down. It's like 170 points. It was a good one. Yes, there's some little scalps on the 1 minute, but I'm not going to cover that. Well, why not? Let's do it. Let's cover it. Since there's only one little retracement scalp trade. So let's take a look. Okay, let's go back here. Like I said, I was selling in here, took some profit, selling. I sold again in here, took the profit right here. And then in here, I sold again in here. Let me show you the divergence here I was looking at. It's right here. Right here. Down to here. Okay? You would have got, I got in right in here. Just underneath the pivot. Because I knew it was such, well, I didn't know for sure. But I could feel it. That they were going to just dump it down today because of how quick we went down here in the first like 10 minutes, right? 20 minutes, right? Look at how much we went down in the first 20 minutes. 147 points, 150 points, let's just say, okay? So I knew because of the big dump, we were probably going to continue and dump more. And because it rallied up so quick, well, not so quick, but so much just yesterday, I had that feeling. See, trading's not just about strategy and the setup and getting in on the setup. Sometimes it's about feeling. I'll be right back. Need some water. All right, where were we? So, yeah, so it's like about what you see on the chart, and sometimes just a gut feeling, you know, and I was right. I sold it here. I took the profit right here at this low. Did I know it was going to keep going down like that? See, no. If I did, I would have held on. How much more did it go down from where I got out? Look at that, 180 points down worth. Holy jeez Louise. Yeah, but you don't know. You just don't know. You know what I mean? You don't know. Okay. Would I do any selling like farther down here? Hell no. Hell no. No, because you don't know what's going to happen. You know? Like even selling on the opening of these candles besides the higher closing candles, I wouldn't sell. I wouldn't trade those either, because look at how far it's went down since the open, man. It's went down like to here. It's went down 270 points. Would you really want to sell it down there? No, but look, both of these trades work down here too. Anyway, let's move on to the Dow. Wow, look at the Dow did. It did the opposite of the NASDAQ. It rallied up like a motherfucker. And look, I was looking maybe to trade this today. I do that every time. Oh, shit. That's why I put that arrow there. There's a trade right there. That's a double bottom divergence. Let me show ya. Right there, you can see it. See that? Yeah, and right here. See that? Right there like that. You would have got in right there from the open. That's the open right there. 1630. You would have bought the close of the opening candle and look, up it went. Or here's a lower closing candle right here. This is the 5-minute chart, ladies and gentlemen. You would have bought on the opening of this candle, and look at that if you would have done that trade. It went up 208 points on that trade. Look at that. Isn't that beautiful? Is there divergence to sell? Hell no. They just slammed it down. That's crazy. Wow, that's crazy. The Dow is good today. It was a good boy, the Dow. Good boy, good boy. Okay, let's look at the S and the P. What did it do? Okay, we had divergence up here, just like the NASDAQ, okay? High, retracement, higher high. Oh, you're not supposed to stick there. You're supposed to stick there. There we go. And right from here, like that. See? That is before the open. Okay, right there, you would have sold it. Your stop was very small, like 5 points, 5, 6 points. Did it go down 5, 6 points before the open? Yeah, it went down 7 points. You see? Remember I told you 8 or 9 times out of 10, if you're using a target the same amount as your stop, it's going to hit it 8, 9 times out of 10. Okay? That's why I only measure 1-to-1 risk reward. That's why. Okay? Then we had, pull that up, we had a double top here. You see that right here? Beautiful, beautiful double top. Look at that. And right here, down here, like that. See that? Let me pull it up even more to draw it correctly to show you it's divergent. Gotta love that OSMA. The OSMA is the best divergence searching tool in existence on the planet. I've been using it 11 years, ladies and gentlemen. I even had it made for NinjaTrader. So I know you're always looking at my, MetaTrader 4 charts, but I just want to let you know that I have it for NinjaTrader as well. I have the whole setup, the times, all the levels, the what do you call it? The pivots and the whole numbers and the OSMA. I had it all coded for NinjaTrader. So if that's what's stopping you from picking up your, copy of the course, I just want to let you know, if you trade with NinjaTrader, I have a copy for that. Okay. Anyway, let's move on here. That was the S and the P. Okay, so we would have got short. Hold on, a little mixed up, sorry. Okay, right here, we would have got in short. Right on the opening of that, and the stop would have been 16 points. It's the S and the P. And it went down 33 points. That's 2-to-1 risk reward. And we have 2 scalp trades right here. Higher close, down she goes. Higher close, down she goes. Telling you, man, you got to look at that. You got to look at them, trust them, and just do it, man. Just do it. Ooh, that's good. Okay, let's move on now, ladies and gentlemen. We're now going to look at oil. Okay, let's just start with the one I do see, which is way over here. We have a high, a retracement, and higher high. I always want to grab this first. I need to do this first. Draw the divergence first, Jason, then put on the entry. Okay, so then you would have entered short right up here. Your stop was very little. 18, 20 points, 25 points. And down it went. How much? 150. Beautiful trade today on oil for you oil traders. So I want to bring that up so you can see my next setup. It's a little hard to see. We have a low, a retracement, and a lower low, don't we? We do. And there was a sell right here too, a retracement, Joe. Upper close, Okay, came back to the 5 and down she goes. You see, when the price comes down really quick, it's you know, it's quite obvious that the moving averages will separate even more the farther and the quicker that the price goes down, or the farther and the quicker the price goes up. See how the sorry, see the distance here in between the gap, and then look at how big it is up here. See, same thing coming down. See, we had a major gap because the price was so far away from the moving averages. So that's why you can't just, like, you know, do one higher close candle than get in this particular situation right here. You need to, like, wait for it to come back to the 5 or even to the 7, okay? Higher close candle, then you sell, and down you goes. You don't sell after 1. You can, but you'll experience drawdown. Do you see what I mean? You see what I mean. Okay, so there was this right here. It's divergent. Doesn't really look like it is, but it is. But look at where you had to buy if you waited for the candle to close. Way the fook up here. Stop would have been huge, 70 points. Oh, but look. Went up 75 points, ladies and gents. Still got your 1-to-1. Risk reward. Gotta love it. Okay, let's move on to gold. Yeah, I bet you there was a big move in gold today. Yeah, look at that. Look at that, baby. Woo! Gold was good. Gold was a good boy today. Good boy, good boy. Pat on the back. Good boy, gold. All right. Don't mind me. I'm just a little crazy. Okay. Double bottom, man. Double bottom. Right there like that. And you would have got long right there. Way down there. Yes, gold. How far did we go, gold? Oh, only 89 points. Really? Pips? Really? That's it? That's it. And a deep dip along the way right here. And another little dip. So here is a lower closing candle. So you would have bought it right here on the opening of this one, and up it goes. And this one, see, just like I just showed you on oil, it came up so quickly that price after one closed, it wasn't near the moving averages. So you waited for this one. Now this one, see, I wouldn't have done this one because it exceeded both moving averages and closed below them. I would have not touched it. I would have not touched that trade to buy it. However, if you wait for a candle to, doesn't matter how far it went down, you wait for a candle to come back up and close like basically above the moving averages, that's a good entry place right there to go long. Boom. And that's it. And now trading is over. You know, it's not for, it went up a little bit. If you would have did this big honking candle down, it went up, oh, it went up 15 points. So, but you can see now it's topping out. Every time you see a run like this and then it starts chopping going sideways, that's what you call a top out. Actually, I just come up with that word today. It's topping out. And same thing when it comes down to a low and it just keeps going sideways, sideways, sideways. Buyers and sellers don't know what to do. It's bottoming out. Okay, that's bottom price action. So you need to not sell down here. You need not to buy up here because the move is over right here. See that? Right from here, the move is over. Over, gone. See ya. It's gone. You gotta get the cream in the middle here. You know what I mean? We don't need the whole cow. We just need the cream from the cow. And the cream from the cow is in the center of the move. Right there. All right, let's move on. That's a good friend, Natalia, who explained that to me. She said, we're just going after the cream, Jason. Not the cow. We don't need the whole cow. She was a sweetie. Actually, the very first trading system I ever bought, I bought it from her. Yeah, and I've stuck with it was like, I don't know, 4 or 5 moving averages, and I've always stuck with the moving averages since then. Yeah. No, actually, I bought another one before that. This is back in 2005 when I was green. I was a green trader back then. It was like my first barbecue. And yeah, another system. It was the 10, the 25, and the 50. I can't remember if they were EMA or SMA. I can't remember. It was like shit. It was like how long ago? 2005. 28 years ago? No. No, 2005, 18 years ago. Okay. Time to move on here. So anyway, we're looking for the cream, not the cow. Okay, let's go look at the pound yen now, ladies and gentlemen. Okay, right here. Oh, even there too. We'll show them all, okay? Right there. Because they just stand out at you, like they're just so easy to find. This is easy to see, bullish divergence right here. You would have got long right here. Your stop would have been 17 pips. Went up 25 pips. You were good. It hit your 1-to-1 win-loss ratio. So we have a high, a retracement, and a higher high. And we have that. And you would have got short somewhere in there. So you got short here. Stop, it wouldn't have hit it. Stop would have been 21 pips. It only went down 15 pips, see? We're always waiting for that signal. That's the signal bar, I guess you could call it. If you jumped in before that, well, you could have got your 1-to-1, okay? Then we had a low retracement, lower low. From there, well, actually, I'm all mixed up here. Okay, low, retracement, lower low. That would be to buy. That's why I'm looking at it weird. Yeah, there's no trade to sell it to take it down here. Okay, and there's no trade to buy it, because if we draw it in, let me show you right here to right here, let's say, okay, which is basically, oh, it's not even right. Okay, hold on. There. See, now we're waiting for price to come back up here to buy it to go up, and it didn't go. It just kept going down. The 5 never crossed back up over the 7. It kept going down. Now it's going sideways. Now they're making money off the algorithms. Yeah, the algos. Let's look at the euro yen. Oh, very wicky, very choppy. Slop, slop, chop. And I see no fucking trade here either. Look at this. Very crappy. If you would have got in short right here, you know, you would just be like, it'd be like a gut instinct, you know, like a trade what you see, not what you think. And what you see is it's crashed down. Maybe it's going to go down further. And it did, about 20 pips. Okay, let's look at our last instrument of the day, ladies and gentlemen. It's the pound dollar. What do we have here? Well, we have a trade right here, high and higher high. High and a higher high, and like that. So you would have got short right there in the middle of the UK and the US session. You would have got short there. Your stop would only be like 11 pips on the pound. There's 33 pips. There's 56 potential pips. And what do we have down here? We have a low, a retracement, and a lower low. And here it is on the OSMA. So we would have got in right in here. Got long right there. It's also a double bottom right here, see? You would have got in here, your stop would have been 16 pips. I'm pretty sure we got 16 pips. Oh, we didn't quite make it there. Look at that, 14.7. But up here we got 20, so we got our 16 pips. And that's it. That's it for today. So, ladies and gentlemen, once again, my name is Jason Sweezy. I trade divergence and divergence only. It is my passion. I've been doing it, staring at the charts, looking for divergence for over 11 years now. Before that, I used to trade other stuff, like Forex Pipsnagger and stuff like that. But I found my true strategy, my true calling with divergence. And I do believe I am one of the best, if not the best person that you can come to if you want to learn how to trade divergence with a very simple entry system and stop system with 2 moving averages. So anyway, if you'd like to pick up your copy, you can. If you're still struggling at whatever you're trying to trade today, you can pick up your copy. It's in the description, the link to click to go and check it out. So anyway, thank you for listening. Thank you for watching. If you could be so kind to click on the like button, and if you haven't subscribed, please subscribe, and we'll see you tomorrow. Same time, same divergence channel. Where did that come from? I think it was Batman. Good luck and good trading.